Hey, what's up guys, John here. In 2007, Michael Burry, John Paulson, and Jeff Green all bet the US housing market was going to crash, and collectively they made billions of dollars because of this bet panning out.
We made $725 million, I think, on the funds in 2007, and in the first 6 months of 2008 there was about $730 million in withdrawals.
But what if I were to tell you that right now we are seeing many billionaires and very, very wealthy investors betting one specific pocket of the housing market is going to crash in a biblical-like way? I'm talking worse than 1929, worse than 2008. What is that pocket? What is that market? Is it single-family homes? Is it, office buildings? No. They're betting apartment buildings are going to crash in value. It might seem hard to believe because in an affordability crisis, people can't afford to buy homes. So they're gonna have to live in apartments. People are gonna downsize from single family homes to apartments, and we're gonna see a situation where rents are gonna remain somewhat strong because of the newfound demand. But when you look at what's actually happening, you're gonna see one thing, that apartments and apartment rents are going to fall in a very, very, very big way. And we're going to see a massive repricing of a lot of these assets nationwide. So much so that banks and lenders no longer want to lend on this inventory. Now look at what's happening here, because if you're thinking about investing in real estate, I think the biggest investing opportunity and the biggest chance to get rich in real estate is right ahead of us. It wasn't 2021 to 2022. That was the biggest setup. This that we're walking into, this is the big opportunity. Please hit the like button. When you hit the like button, YouTube will share this content to educate the people about what's going on in America's housing market. And if you'd like to fix your credit to position yourself for this massive wealth transfer, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, or any negative item in your credit report, go to GreatCreditFast.com, click the link in the description, and schedule a free strategy session for tomorrow, for Monday. Take a look at this. So short sellers see distress emerging in apartments as borrowing costs surge. Came out yesterday. Right, January 6th, they're saying $1 trillion of multifamily debt is going to mature over the next 4 years, from now until 2028. But when you look at what lenders are doing, they're done. They're not lending. Look at this. Look at this chart. At the height of the market, when everybody on social media, everybody online, every ad was for a real estate syndicator, invest $5,000, invest $10,000, you can't lose money, you're going to make 20% a year, right? This was this period, right? And then we're in this period now where we're starting to see syndicators going bust. A lot of syndicators in Austin, Texas. You're hearing some really, really big companies worth 2, 3, 4 billion in AUM, assets under management. They're just completely going under. The reason for it, there's so much apartment construction. There was this big lie being told that we have a housing shortage in America. Now, if you look at Austin, Texas, for example, they have 233,000 apartments existing as of 2020, 2021. Now, there's 120,000 apartments in the pipeline, meaning inventory is going to increase over 50%. What is that going to do? Rents are going to continue to fall. And at the same time, insurance and taxes are going up. What does that mean? Problems. Big problems. Not to mention that borrowing costs went from 3% to 7%. So it's a big issue, a very, very, very big issue. It's not just in Austin, though. This is happening nationwide in many markets. Look at this. Apartment loans are going to servicing rise 12 basis points. The biggest record, the distress record. Multifamily woes continue for some of the biggest players. I mean, it's really interesting why maintaining multifamily occupancy will be tough this year. You're going to see so many tenants going back to their landlords when it comes time to, sign for a new lease. They'll say, look, I'm paying $1,500 now. I'm looking on apartments.com. I'm looking on Zillow. I can find something here for $1,420. Find something for $1,400. I'll stay. Give me $50 off, $75 off. Might not sound like a lot, right? Might not sound like a lot. But what this means is over a 12-month term, it costs that landlord $600-700. But their alternative is if you move out, they might not be able to refill that unit for a month or 2 months or 3 months, costing them $4,000, $5,000, $6,000. And because of this, they're gonna buckle. They're gonna try to keep their units full because they have a loan that needs to get refinanced over the next couple of years, and they need to show as much income as possible. But when you have this happening at the same time of all this new inventory, we could see a situation where rents are gonna go from $1,500 to $1,350, $1,375. Tenants are gonna start becoming more demanding of what they would require to stay. It might sound far-fetched, but wait till you see the numbers. You're going to see that this is right on the money here. So rents expected to drop in several U.S. cities as markets near oversupply. Real estate report, right, came out about a month ago, 3 weeks ago. Of the 100 cities analyzed in Zumper's annual rent report, which was released this week, 55 have seen rent prices drop. 55. So for a lot of people saying, oh, rents aren't going down. Out of 100 cities, 55 are already going down. That's over half of the country of these cities, right? Already seeing it. And an additional 17 are flat. So these are already prime to likely move into this category as inventory hits this market. And they're talking about 1 million apartments hitting the nation this year that are going to be finished and come to market, right? So you're going to start seeing this go from 55 to 60 to 62 to 65 to 70. What is that going to mean? Well, these landlords are in big trouble, right? These leveraged landlords are in very, very big trouble. It's different when people buy apartment buildings compared to a home. When you buy a 30-year fixed rate mortgage, you're buying security. When you buy an apartment building, you're buying the potential value. How can you increase rents? How can you decrease the expenses? How can you make this building run better, right? If you buy a building at the height of the market and rents are going down and it's running worse and the expenses, insurance and tax are going up, you're walking into a situation where you're going to lose all your money, right? You're going to lose all your money. But now, over the last couple of years, a lot of that money wasn't even the investors. They were raising it online. They were raising it through friends and family. And so, they got their fees. They got their acquisition fee, their syndication fee. They're getting their management fees. They're just going to walk away, right? That's what we're walking into. It's really shocking how fast this thing's going to move. But it doesn't stop. Look, about 900,000 units are currently under construction. 440,000 new units are expected to be completed this year, right? So, look at this. Multifamily insurance rates are up 28%, right? The impact of rising multifamily insurance rates on record. Multifamily is in peril, the perfect storm. There won't be a better time to invest in multifamily than in 2024, 2025, 2026. 2027. Like the next few years, people can make an absolute fortune. Look at this. Yes, U.S. apartment construction is at a 50-year high. 50-year high. But the very fascinating aspect of this is during 2021, you had 40% of all mortgages in America taken out at the height of the market. What happens when the labor market changes? What happens when inflation gets worse? Tax and insurance continue to go up on these homes? They're going to turn into accidental landlords. They're going to have to rent out these properties if they don't have the equity to buy them. The average down payment for a first-time buyer was only 6%. The cost to sell a home in America is between 7 and 9%. 5% for realtor fees and transfer taxes, closing costs. Stuff adds up, right? So they're underwater on these properties. And now look, homeowners who held on to 3% mortgage rates are becoming accidental landlords, right? They're being forced to rent these homes. This is going to be more bad news for these syndicators and these multifamily investors that are over leveraged. But I think something very interesting is going to happen here. As we've seen, they've said that landlords are the big problem in America. Landlords are the ones that are stealing wealth from Americans, right? It's landlords. The number one target has always been landlords, saying that housing is a human right. Now, whether you believe it or you don't believe it, when you run a business, if you're selling something and your costs go up, you're going to push your cost onto the customer. The customer is going to pay, right? When the state is increasing taxes, when insurance rates are going up, those costs are going to continue to get pushed on. When borrowing costs and everything gets pushed on to landlords, they're going to do their best to try to push these costs on so they can stay in business. Same thing is true with everything. Health insurance, you go buy anything on Amazon, everything gets pushed on to the customer. But inflation is not the fault of the landlord. Inflation is the fault of horrible policy that has been implemented over the last couple of years. And sure, rents have increased, but so has everything. You can't leave your house for under $100. But now when you're seeing the discussion of a universal rent control and a national renters bill of rights, more people are going to see this, more landlords are going to see this and say, you know what, screw this. It's getting harder for me to collect rent. It's getting more expensive to evict. It's getting harder for me to run this business profitably. You're going to see a lot of people leave the business. But this is actually a great thing if you want to become an investor, if you want to invest in real estate. The reason is you get to underwrite risk based on what is true. You can see exactly what you're investing in versus some type of euphoric, can't lose money type of investment that was 2020 and 2022 in multifamily. You're going to be able to go in there and start to buy a lot of this repriced inventory. And that's what I think is going to happen. I think we're going to see a lot of landlords leave the business, a lot of banks trying to unload this inventory, and a lot of opportunity to go out there and make an absolute fortune in the real estate market. I believe, there's a new Fannie Freddie product out there, 5% down payment. You can buy a multifamily property, 2 to 4 units, residential multifamily. So if you're a renter right now and you're like, hey, I don't want to be a renter. I feel like I'm, working all these hours every single week and I'm not saving any money. I'm not building any wealth. Hey, you can go out there, buy, triplex, fourplex, put 5% down. Buy a $400,000 deal, put 20 grand down. Maybe you need an extra 5 grand for closing costs or whatever you may need. 25 grand. A lot of people can rub that money together, get it from, family members, friends. They can maybe do a joint venture with their friend, each put down $12,000 or $10,000 and go in there and buy it together. Like, people will be able to go out there and make some big investments in the next year or so. And I think that the time to do it is when everyone else says it's a horrible time to invest, when you don't want to invest in real estate, when it's no longer sexy. That's when you want to go out there and invest. I think it's going to probably be this year. What do you think about this situation? Do you see this big problem with lending on this all this inventory, all these cities falling into really, really big trouble? I mean, you're talking already over half of the 55 out of 100 cities, rents are already falling, and 17 more cities are moving into flat area, meaning rents are likely going to continue to fall. What do you think is going to happen? Drop below. Let's have a conversation. If you'd like to fix your credit to position yourself for what I think is going to be the greatest transfer of assets in American history, we love to help fix your credit at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, or any negative item in your credit report, go to GreatCreditFast.com. Click the link in the description just below this video. Schedule a free strategy session for tomorrow, for Monday. Catch you in the next video.